It's over.
The long-awaited rate cuts that were supposed to save the real estate market, it turns out, are doing nothing to actually help the real estate market as sales fall, even with 2 Bank of Canada rate cuts. But that being said, the expectations for lower rates in the future are growing, and they are getting more and more in line with rates going down to as low as 2.75%, at least the Bank of Canada rate going down to as low as 2.75%. And that has CREA coming out and saying that even though the market's bad because interest rate cuts didn't do what they were supposed to be doing, well, don't worry, 2025 is going to be an absolute slam dunk for the real estate market, which is kind of ridiculous given the fact that at the same time, they're saying the rate cuts didn't help. So let's get into what is actually going on in the Canadian real estate market. And at the very end, there's one piece of data, one really important piece of data that I need to show you that could give you a pretty good indication of where the real estate market is going to go over the next 12 to 18 months. Keep in mind that none of this is a forecast. It's just an evidence-based look at the data, and any interpretation you get from this is, of course, your own. But before I get into it, my name is Nolan Matthias, and if you want the latest Canadian real estate and financial news, this is the place for you. So do me a favor, hit the subscribe button and hit the like button so more people like you can see this video. And don't forget, you can still get my book, Mortgage Secrets, totally for free by going to mortgagesecrets.ca. It gives you everything you need in order to negotiate with a bank, a broker, in order to get the lowest rate. It gives you all the secret tips and tricks on exactly how much you negotiate, or should I say how much you can negotiate. And by the way, if you are looking at renewing your mortgage in the next little while, well, you're going to want to make sure that you take a look at this so that you've got that negotiating power that you will need to have that fight with your bank. Okay, so let's get into it. Let's jump into the news sources here and take a look at what is going on. So I'm going to start with a couple headlines here. CREA cuts home price and sales forecasts as inventories build. Yes, that's right. Inventories are building, partially because there are more listings coming to the market, which I'll get to in a minute, and also because there are less sales. And when you have more inventory and less sales, well, that leads to lower prices. So therefore, CREA has in fact lowered their forecast for the future here. And in the same vein, national home sales fell in July despite lower interest rates, even though the lower interest rates were supposed to be what would save the market. And of course, we saw this in June. We saw that first Bank of Canada rate cut. And of course, all the people came to the market listing their properties thinking this is when all the buyers are going to jump in. And well, the buyers never jumped. So therefore, we have found ourselves in a situation now where we've got more listings, about the same amount of buyers. And therefore, the market is now shifting towards a buyer as opposed to a seller, which is good for those of you who want to go in and get a good deal. Now, it definitely depends on where you are in the country, how good of a deal you're going to get. I'll show you some data on that in a second. And then last but not least, we've got forecasts for home prices scaled back after sales slow in the spring. And then this one, CREA predicts 2025 will be a slam dunk for home sales despite a slow July, which this prediction, this forecast, the fact that they're saying that 2025 will be a slam dunk is absolutely ridiculous. Now, I don't necessarily think it's going to be a catastrophe either, but to say that 2025 is going to be amazing just pushes out expectations for buyers to 2025. And as people sit on the fence longer, well, that could potentially lead to a point in 2025 where they say, hey, all those other rate cuts that came after this video were made, well, they were supposed to help, but they didn't. So we really don't know what's going on, which isn't common for economic forecasts, because you have to keep in mind, economic forecasts are always based on the information that's available now. They aren't, well, they're forward looking. They can't predict what happens in the future and the outlier events. And therefore, these forecasts are always revised. So I'm not sure if CREA will be saying it was a slam dunk a year from now. They very well could be saying that, but they could very well be saying it was flat, or maybe it went down too. But with respect to interest rates and what's going to happen there, we could actually see some increased activity, but only time will tell. So let's take a look at what's going on with home sales. As you can see, obviously June was very much a poor month for Canadian home sales. July wasn't much better. And when you look at the sales numbers across Canada, looking at, I guess we can call these the 4 major provinces. By the way, all of the data in here comes from Edge Analytics. This is by no means all the data that comes out in their reports. These are just a few pieces I've selected. If you want to see the full data, I highly recommend, especially if you're in the real estate industry, going to Edge Analytics and checking out their stuff. It has a small subscription fee, but if you're in the real estate market, it is definitely very, very useful. Now, if you are looking at this going, where's my province? Because Nolan's not talking about it, keep in mind that these aren't my stats. These are the ones that are deemed relevant by the person who produced them. Now, that being said, Canada's year over year sales are down 3.5%. If you look at BC, they're down 13.2%. If you look at Ontario, they're down 5.4%. Alberta is about flat at down about 0.7%, but look at Quebec, up 4.3%, a bright spot in the Canadian market. I'll show you more data on this in a little bit. But then you go and look at those two provinces with the biggest new listing numbers. Well, they are Ontario and BC, and also Quebec, who has the most increase in sales, but also has the biggest increase in listings, which I find kind of interesting. And then if you look at active inventory, well, here's where the numbers become real shocking. Ontario up 46.6%, and BC is up 35.7%. Now, this is largely because there are more new listings, less sales. That increases the amount of inventory, which ultimately is what shifts things to a buyer's market. Now, that being said, there's some interesting interest rate news here that we need to cover. So, the implied Bank of Canada policy rate path, this is based on the futures market, is now showing that the market expects interest rates to be as low as 2.75% in 2025. That is a big reduction. Basically, what the markets are saying is that Canada, and I'll show you some information on mortgages that's really interesting in a second here that kind of backs this up, but Canada is in a place where we need to lower interest rates quite drastically. And the bond yields are showing the exact same thing, with these bond yields coming down to levels that we haven't seen well since around the beginning of the pandemic. Now, and I shouldn't say the beginning of the pandemic, around the middle of the pandemic, because that's when interest rates really got to their lowest. Now, some are now predicting that interest rates, 5-year fixed rates, could end up in the magic 3% range. So, not saying low 3%, but in the 3 to 4% range by middle of next year, which I think is interesting, it's compelling, and it also provides some insights with respect to mortgage strategy, which I'll get to a little bit later on, which I think is very, very interesting. My buddies, the Noex from Nanaimo, brought this up to my attention 2 weeks ago when we were out fishing. They said a really great strategy could be to take a variable rate, wait for interest rates to float down, then lock into a fixed. I think it's an interesting strategy, but there are some risks, which I'll get to in a minute when I talk about that. Now, here's what's really interesting, though, and this is what is leading many economists and the markets to believe that the Bank of Canada has to do something about interest rates. They're going to have to drop them more. And that is because mortgage interest now makes up 1.2% of CPI, which means that if you take the mortgage interest costs out of the equation, inflation on everything else is around 1.5%, well below that 2% band that the Bank of Canada looks for. So, that being said, the one thing that is keeping interest rates high right now, the one thing that's keeping inflation high is mortgage rates. And the Bank of Canada has direct control over that, which is leading many to believe that they are going to, in fact, start reducing rates so that they can actually bring inflation all the way back down to where it should be by reducing mortgage interest costs. Now, that being said, mortgage origination volumes in Canada are following the sales trends. They're down quite substantially. This is largely due to less buyers jumping into the market. Now, there's an argument to be made that all of the 2024 and all the 2025 buyers and all the 2026 buyers got moved forward into 2022 and 2023 as interest rates were low and people started to believe that they weren't going to ever be able to buy a home and that they had different preferences on the type of homes that they would want to live in. So it moved a lot of the buying activity forward. So whether or not it is the interest rates aren't low enough to encourage buyers to get into the market, or it's that all the buyers that would have been in the market bought 2 or 3 years ago is up for debate. But the reality here, the facts are that sales are down. Now, as you take a look at the types of mortgages that people are taking, this is really interesting. So 3 and 4 year fixed mortgages are now at the highest level that they've ever been. In fact, rarely in my career have we ever seen more people taking 3 and 4 year mortgages. Now, I think there's a problem with this. The problem with this is that most people are taking these 3 and 4 year mortgages at rates that are pretty similar to what they could get for a 5 year mortgage. And what that implies to me that they're not taking the guaranteed longer rate is that they're trying to time the market. And that's dangerous. And the strategy with respect to taking a variable rate right now is also dangerous because it is very much a market timing strategy. But I think the people who are choosing 3 and 4 year mortgages right now, thinking that they're going to be smarter than everyone else and time the market, are essentially the same as the people who took variable rates at the beginning of the pandemic, who didn't understand that there was some risk associated with that, thinking that they were smarter than the market. They knew something that everyone else didn't, and that they're going to get a better deal. So if you're thinking about a 3 or 4 year mortgage right now, and you're not thinking about it from the perspective of, I'm only going to be in this home for 3 or 4 years. I'm going to need to pay it out in 3 or 4 years. But from the perspective of I'm going to get a better deal because I'm going to time the market, well, your thinking is probably flawed, and you probably need to take another look at the decision that you're making. And this all comes down to when you're making these decisions, having your risk tolerance assessed properly. And in order to do that, you need a good mortgage broker. In fact, you probably need a great mortgage broker. And if you need a great mortgage broker and you don't have one, feel free to reach out to me. I can connect you with one or connect you with somebody from my team. And same thing goes for a realtor. If you don't have a great realtor, feel free to reach out to me. We have a network across the country. We can make sure that you have the right people. They're helping you make the decision in the right way instead of doing silly things like trying to time the market. Now, getting into housing starts, this is where it gets really interesting. We saw this crazy bump in rental housing starts right before July. Now, this largely had to do, in hindsight, with a bunch of the new rule changes with respect to the CMHC Select program, which is a program that's designed for people to build rental properties. And as a result, we saw this increase in new housing start applications in order to take advantage of the new rule changes that were coming in that program. Now, what bothers me here is that we're seeing a decline in condos, we're seeing a decline in single family home construction, and never before have we seen more rentals being built than condos and single family homes. And I talked about this last month. I don't think building rental properties that are pretty much identical to the condos that nobody wants to live in is the right answer when it comes to building homes. And I definitely see a potential issue 2 or 3 or maybe 5 years down the road where not enough single family homes are being built relative to condos and rental properties, and therefore, we're going to have this divergence where we're going to see single family homes getting more expensive, condos getting more or getting cheaper. And therefore, we're going to have this real stretch for somebody to go from living in a shared property to living in a single family property that is similar to the stretch that we saw in Calgary between basically 2010 and 2020. So watch out for that across the country. But evidence to the fact that this is all program based and the new housing starts data that CMHC put out last month saying, hey, things got really good in July isn't really an accurate indication of what actually happened. It was an outlier situation, is the fact that in July, new or new multifamily building permits came down quite significantly from June. So this is a good indication that the housing starts that CMHC was so happy about and the government was so happy about was just an anomaly, and that it was a single spike in the market, and things have come back closer to normal now. Now, looking at new home sales, Toronto year-to-date new home sales are down to some of the lowest that they've been. Now, this is largely due to the condo market because most of the new homes in Toronto are condos. And as you can see, the new condo sales are down quite substantially. Now, what is really scary about this is that the new condo sales are down quite substantially. The resale condo sales are down quite substantially. And we've got a significant amount of inventory of properties, condos that nobody wants coming to market by the end of this year and then into 2025 and 2026. Now, there are some people saying that, well, 2028 is going to be a really good year for condos, and it might be a good idea to buy pre-construction right now because there isn't going to be any condos available or coming to market in 2028. But what I'm going to argue is that we are going to be way oversupplied in the next 2 to 3 years, and therefore we're going to have more than enough supply when the new condos aren't coming online because there's going to be a whole bunch of resale ones still available in the market. But again, this is where I get really worried. This is the single family building permits, again, down to the lowest levels that we've seen since the 1980s, even though we have a growing population. So growing population, more housing need, less single family homes, that is going to very much put upward pressure on single family home prices in the future here. And we also have some data that shows that that completions could be at an all-time high, especially when you look at the Ontario construction employment changes. We are seeing the number of people employed in housing construction in Ontario coming down quite significantly, which means, again, there's less new homes being put online, there's less single family homes being built in Canada, and that's going to create a divergence in the market, which I'm really worried about in the future. Now, just to put this in perspective before I go on to the next slide here, if you're somebody who is looking at buying a single family home and you're thinking the next 2 to 3 years you might want to make that move, it may be worth considering it sooner rather than later Because if those single family home prices do go up or stay steady and the condo prices come down, well, you could find yourself with quite a big gap and the actual inability to move. So if you've got a small family, or if you're starting a family, or I shouldn't say a small family, if you've got a small family, you're probably okay to live in a condo. But if you've got a young family and you're looking at making that move in the near future, definitely something to consider right now based on the number of new construction starts in single family homes. Then this is where the rubber meets the road. So as we start to look at new listings, we're seeing the new listings come up to pretty much average levels, which is leading the sales to new listing ratio to come down quite substantially. Only about 40 to 45% of homes that are coming onto the market are being sold right now, which means we're shifting into a buyer's market. This is where you get the opportunity to go out, name your price, and hopefully get a really good deal on a house. And as a result of the sales to new listing ratio coming down, so less of the new listings are actually being sold, what this is leading to is it's leading to higher inventories. And higher inventories typically mean better deals. Now, it largely depends on where you are in Canada, but where we're at right now is we're seeing a slight uptick in housing prices. Now, this is largely being led by not Ontario and BC, and this is the first time in a couple of months that we've actually seen this happen on a regular basis. And that's leading to, again, very much flat pricing across Canada with respect to housing prices. But what's really interesting here is when we start looking at housing prices relative to the rest of the world, Canada is still one of the most expensive places to live, not just from a real house price perspective, but from a price to income perspective, and also from a price to rent ratio perspective. Now, that being said, we're seeing the number of new immigrants coming to Canada start to come down. We're seeing this both with temporary residents and permanent residents, which means we could start seeing the demand for housing starting to slow, which is a good sign, especially as we have all this new inventory coming up. But that being said, the Real Estate Outlook Index, this is from Bloomberg and Nanos, is showing that many people believe that their houses are very much going to be either the same price a couple of years down the road or less affordable. And not a lot of people are thinking that housing prices are set to go up. Now, relative to the consumer price index, or sorry, the consumer confidence index, the numbers for real estate, the sentiment for real estate isn't as bad as it is for the overall economy. But nonetheless, when we start to see sentiment change in a market, that is typically when we start to see the market change. And if the sentiment's coming down, we're starting to see less people want to get into the market and so on and so forth. That could mean that instead of it being a slam dunk year for housing prices next year, well, it could end up being not a slam dunk year. It could end up being a year where we start to see things either flatten out or come down, even in the face of lower interest rates. And this is where things get really concerning for me. This is the one piece of data I really wanted you to see. And this is consumer insolvencies in Canada are coming back up to levels that they were at during the pandemic, and they're quickly rising. And what this means is that those higher interest rate costs that are leading to higher prices and higher CPI are leading to real pain for Canadians. And what this means is that the Bank of Canada needs to start doing something in order to start lowering interest rates so people feel less pain. And if they don't do it now, well, the outlook for the Canadian real estate market in 2025 could be less of a slam dunk and more of a catastrophe. Because ultimately, if people can't afford the homes they live in, if people aren't employed, and if things get worse without the Bank of Canada doing what they need to do to, within their control, make it better, well, things could get really bad really fast. Oh, and if you want to see what's going on with interest rates and what's going on in the rest of the Canadian real estate market, make sure you check out this video right here.